Hello, this video is going to be about confirmation number 4, about confirmation using the cumulative delta. Now, I was talking about delta in the previous video, but this one is going to be a bit different. So let me do a brief recap, alright? So you can catch up if you forgot. So delta is difference between buyers and sellers. This is a short definition of delta. It's not 100% correct, but if you remember this one, you should be fine. Now, this is how delta is calculated. Ask minus bid. And if you look at the order flow software, then it always gets calculated for every given footprint. So in this case, it would be all those numbers, sum of all those volumes traded on the ask, minus all those numbers, the sum of those numbers, sum of those volumes which were traded on bid. This gives you delta. In this case, it was 22, which means delta was positive, which means that the volumes traded on ask were bigger than the volumes traded on bid. Simply put, buyers were more aggressive than sellers. You can see the delta below each footprint, also in here in the summary. Now, what you can also see in the summary is cumulative delta. And the cumulative delta is sum of all deltas since the beginning of the day. So this is the beginning of the day in here. So the delta of this footprint is 22. So the cumulative delta is also 22. Now, delta from this footprint is 3, and the cumulative delta is 22 plus 3, which is 25, and so on. It continues like that. Alright, this is how cumulative delta gets calculated. But this video is not going to be about order flow, but it's going to be about separate indicator, which I developed. It is also called cumulative delta, but it's a bit different. It looks like this. It uses line chart, and I prefer to use it on a really fast time frame, so 1 minute is ideal. Now this basically shows you the same thing as the cumulative delta on the order flow. So essentially it's drawn using those numbers, those cumulative delta numbers, but if you use the 1 minute setting, which is the default setting for this indicator, the default setting which I personally use, then the cumulative delta gets updated every minute. So the changes in delta, the changes between aggressivity of buyers and sellers are way easier to track because it's fast. You don't need to wait for another footprint to show you how the delta changed, but you see it immediately on this line delta, alright? So it's easier to track the changes and most importantly the divergences because it is fast. 1 minute chart. Alright, so that's why instead of the cumulative delta on the order flow, I prefer to use this delta. It is just a visual thing, but in real trading there is a huge difference between this and this. Now this is how it looks in my chart. I use it as a separate indicator, which I open with a simple price chart. And I use 1 minute price chart, so there is 1 minute on the price chart and also 1 minute on the delta. And what I like to use is a line on close chart for the price. Not candles this time, but simple line chart like you see in here. Alright, so this is the 1 minute window where I track the changes in delta. And I always compare the cumulative delta to the price. This is basically how my trading strategy with cumulative delta works. The strategy is super simple. What you do is you look for divergence between price and cumulative delta, preferably in support or in resistance zone. So I use it as a confirmation. I prefer to use it as a confirmation, but you can also use it as a standalone strategy, all right? To catch highs or lows of swing points, you can use it for that. What I personally prefer is, for example, use volume profile to find strong support or resistance levels, and around those levels I switch to this cumulative delta, and I want to see a divergence between price and the cumulative delta. What divergence is basically this. The price goes one way, like in here, the price goes downwards, but cumulative delta rises. This means that price is going downwards, but there are more and more aggressive buyers entering the market. So buyers are entering their long positions, but the price still continues going downwards. You won't see that very often, but you will very likely see that around support and resistance levels. And when you see that, the price will usually reverse. In other words, react to the support or resistance zone. So imagine in this case that you had a support somewhere in this area of the price chart, and you wait for some confirmation to enter along from that support. Price is going downwards into the support area, and delta is rising. Buyers are entering their positions while still the price is going downwards. This is the confirmation. This tells you that buyers are entering their longs in this support area, that it's probably going to work, so you enter long. It's that simple. The only thing you need is divergence between price and delta. Price going one way, cumulative delta going the other way. And that's it. It's that simple. Just make sure that you use the same time frame on your price chart as well as on delta, preferably 1 minute time frame. Now, when I was preparing this video, I actually saw a very nice divergence on the euro, so I took a picture. The price went upwards, delta went downwards. In other words, there were sellers entering their positions while the price still went upwards. So I took the picture for you, and this is the result. This is the same picture, only half an hour later. This is how the price reacted. This is the initial divergence, price going upwards, delta downwards, and this is where the price broke and went into a sell-off. Now, as I said, you can use it as a confirmation around your support or resistance levels, or you can use it simply on its own, or maybe with some other trading indicators or strategies which you trade. It is super simple and it's working very nicely. So let's now have a look at some more examples of this. In here the price was going downwards, delta was going upwards. Now you don't really need to pay much attention to the color of the delta, whether it's red or green, because it doesn't really give you any information. Only thing you need to pay attention to is which way it is heading, right? It only shows green when it's above zero, when the delta, the cumulative delta for the whole day is positive, and it shows in red when the cumulative delta for that given day is in negative numbers. But I don't really think that this information is useful, at least not for me. I only look for the divergences. All right, so let's have a look at another example. The price is heading downwards, and you always want to look for the swing points in here and in here. That's how you can tell there's the divergence. All right, so something like this. makes it easier to watch those swing points. Higher highs, lower highs. But usually it's pretty simple. You can just tell by looking at the chart whether it's going downwards or upwards, right? So there's nothing special about it. Another example, price is going downwards, delta is going upwards. In here the price reverses and goes upwards. For example, in here if there was a support and you saw the divergence between the price and delta, this would be a nice confirmation of the support, so you would enter it. All right, this is how the price reacted. The price has the overall tendency to follow the delta. So if the price is going downwards and delta upwards, the chances are that the price will turn and follow the delta, right? Because when the price is going downwards and buyers are entering their positions, this can't last too long, you know. This can't last long. The price needs to reverse because people are buying. And when people are buying, the price needs to rise. So the price needs to make a connection to match with the delta. So imagine you had a support somewhere in here. You found that support using price action or volume profile strategy, and you are waiting for some confirmation in here. Price is heading downwards, but suddenly from this point, delta starts to rise. From this point. So, somewhere in this area where you identify that the delta is rising, you go long. Alright? After you are certain that there is a divergence between the price and the delta, you can enter your position. Preferably if you have a trading level there. Now let's have a look at another example. Price is rising, but delta is falling. So even though the price is going upwards, there are more aggressive sellers entering their positions in this area. So the price is likely to turn to follow the delta, to follow the sellers who are currently selling, right? In here, this is the reaction. Now another nice example. Imagine that you have a resistance somewhere in this area and you want to see a confirmation. The price is going upwards towards your resistance, but you notice that the delta is going downwards. Sellers are entering their positions even though the price is going upwards. So the price will most likely follow the delta, follow the sellers, so there's likely going to be a sell-off like in here, right? This was the sell-off. Another nice example, price was going downwards, but from this place there was the divergence because the delta started to rise. Buyers started to enter their positions even though the price was going downwards. Then there was some rotation, but in the end the price turned and followed the buyers on delta. If you had a support somewhere in here, then it would be nice confirmation to enter a long. Another example, the price was going upwards, but from this place the price continued upwards, but delta, the cumulative delta, started to go downwards. Sellers started to jump in their selling positions. So even though the price was rising, sellers were jumping in their selling positions, and afterwards they turned the price, which went into a sell-off. Again, all this started with divergence between price and delta. Another example, Price is going upwards in a price channel, but delta is going downwards. Sellers are entering their positions in here, also in here actually, so this is the reaction. Then the price rises again and delta goes downwards again, so my bet would be that the price will reverse and go downwards again to follow the falling delta. Now this is the last example. Everything's pretty similar, right? Price going upwards. Imagine that there was a resistance somewhere in this area. Delta is going downwards. So sellers are entering their positions while the price rises. This is kind of weird, and eventually the price reacts and follows delta. As you can see, this is pretty cool because a lot of indicators are lagging behind the price, but when you are trading delta divergences, delta is actually sort of ahead of the price. So that's why I like to use the cumulative delta, especially this line delta on 1 minute chart, which is pretty quick and very easy to read, especially if you put it like this below the price. So comparing price and delta is super simple and it gives great results. Alright, so that's for this video. Thanks for watching and I'll see you in the next one.